hi, it's good to have you with us. How have you been?
Good, good. How are you?
Doing very well, Charlie. Before we dive into that, Charlie, it'll be lovely for us to have a quick round of introduction about yourself. You've been out there, you've been a work professional for a reasonably large time. Tell us a little more about yourself, and then we dive into the questions for the session today.
My Indian journey began in 2001.
Wonderful.
Actually, I was working for the Real Networks company, which has provided Hello Tunes. Some friends actually call me half Indian. Some other actually, my genuine Indian friends call me a genuine Indian. Many Indian friends actually ask me like how the Korean guy actually ended up having been India.
Right.
My Indian journey began in 2001.
Wonderful.
Actually, I was working for the Real Networks company, which has provided Hello Tunes. The Hello Tunes before the Airtel, right?
Of course.
When you call, actually, you listen to music.
Right.
So I was the head of Asia business at the time in the Real Networks. So we provided Hello Tunes to Airtel.
Wonderful.
And then the other actually we provide to Idea and Aircel and BSNL, all other
Right.
actually. So that's how my actually Indian journey began.
Wonderful.
And then, it's almost 20 years my Indian journey.
Right.
And then many Indian friends actually call me. Some friends actually call me half Indian. Some other actually my genuine Indian friends call me a genuine Indian.
Right.
Because they see that as a foreigner Indian, actually they see that I understand the India, and then I see the India more objectively, and then especially from the business point of view.
This is a discussion that I'm particularly excited about, right? When you talk of the India market, right, I think fintech has a very, very large role to play, right? And I think, fintech, when we look at it, right, has largely been celebrated for the work that it's done largely on the loan side of things, right? Basically increasing the velocity of Truebalance, right? And there are many, many things that you're doing, right? You're essentially sort of operating as a supermarket for all financial needs, right? And I would love to discuss some of those pieces with you.
As you have seen, my company's mission is the financing the next billion, finance for all. So we are to provide the finance services to the next billion users who are not out of the digital finance and finance service for now.
Right.
So we are focused on those users, and then we are more happy to solve these financial issues of the billion people in India.
Tell us a little more about Truebalance and how are you going after this, right? So what's your market acquisition strategy in that sense?
Yes. Actually, I founded this company together with my co-founders in 2014 July.
Okay.
And then when we founded this company in 2014, we have seen that this mobile recharge is a very good, very big gateway for financial services, but especially for our target users. From the day one we launched our service, we didn't actually target we call India One. India One is like some high-profile 200, 300 million people who use, freely the online payment, and then who use the credit service from the bank. We are very specifically targeting 1 billion people who are majorly using cash. Then they are using smartphone, but actually they don't have enough credit. Sometimes they have no credit, so that they can not get any finance and then the loan service. So from the day one we launched, actually we specifically target for those users. So after we introduced the mobile balance checking and then recharge, we expanded our service to bill payment, and then the e-commerce and insurance, and then the train ticket service. And then finally, actually, we open our lending service based on our own MBFC license. So we got the prepaid instrument PPI license 2016, and then we got the MBFC license in 2019. We, based on these two licenses, we started my full-fledged, financial services. But as you know very well, actually, one of the strongest extra financial services to provide a benefit to users. And then the biggest business model for financial companies is lending. So after we started our own the lending service from 2019, we are very highly focused on the lending microfinance. And then, this microfinance lending is a very small ticket size. We started from 1,000 rupees
Right.
to 50,000 rupees only.
Mm-hmm.
And then tenure is also not that long, from 2
Right.
months to 6 months.
Mm-hmm.
So we are highly focused on very small ticket size and then comparatively shorter tenure product, because our users, they need this kind of a lending. So we are very focused on those micro lending service for now, and then we are growing very fast for now. Even though we are very focused on lending, as I told you, like we are full-fledged, financial platform. So we are providing lead charge for our lending users, and then bill payment users, and then e-commerce insurance as well for the very small ticket size, e-commerce and the insurance as well. So we are the synergy between lending and other financial services for now.
I mean, there are certain factors that are homogeneous in nature. For example, mobile recharge is homogeneous, right? But when you want to build anything which is, say, related to consumption on top of it, that requires a very different kind of focus, right? How are you solving for that? And what are some of the key challenges that you've faced? I mean, you've been here for a reasonable amount of time. 2014 was essentially a very distinctive year because, it brought in the mobile revolution. It kind of changed the market in its true sense. Data became, key. All of that was happening, right? So what are some of the challenges that you've kind of faced, and how do you think 2020 is going to be a pivotal year when it comes to, the new canvas for India or the new possibilities for India?
Yes, it's very interesting and very important question. You're absolutely correct. Actually, my target market, like in next billion users, they are. It's very hard to crack it. Of course, smartphone is the first one. Actually, we see the smartphone booming. Now it's 500, 600 million. They are using smartphone. So every year it's like a 50 million up to 100 million new smartphone coming. So, but these users actually, they even many of them actually, they cannot pay online.
Correct.
Many of them, they have bank account, but only 12-13% of the bank account users, they freely use it. So what we actually approach is that our users, they cannot actually, as I told you, like the gist of the finance is the lending, and then with this lending, actually they can transform their economic life. So to provide this, the lending, it was very challenging. Unlike tier one, India one kind of people, they don't have financial data, they don't have any CB score. So very, very hard. So that's why actually from the day one we launched our service, we try to collect our users' data, our application log, and then their SMS data, all kind of data from the application. Thanks for Google's open ecosystem, we could access some data if they agree to provide us. So from day one we launched our service, we collected a lot of our users' log and data. So we have now actually more than like 700 terabyte data of our 80 million download users. So what we have done is that we built up our alternative credit scoring system. We call it ACS. This ACS, actually, we are not actually dependent on any kind of financial data. Like, bank statement. Many actually lending companies, they ask a bank statement. But we don't ask that. Based on all application data, what kind of application they are using, what kind of SMS they actually getting from the recharge related and the payment related, whatever we collect. And then what kind of a location where they live, and then they have a regular movement for the night and daytime, so that actually we can project they have a regular job or not. And then many kind of social behavior data, how many regular person they have, they make a call and then they send SMS. So all kind of this alternative data, we built our own ACS, and then all our actual lending service is based on this ACS modeling. This is machine learning-based alternative, modeling, unlike traditional financial data-based, modeling. So based on this, actually, we have been providing basically two major lending services. First one is cash loan. Second one is level of loan. So level of loan is more like lower ticket size, and then we have grown like almost 1,500 times. 1,500% increase this year for this level of loan. So 15 times, more growth compared to the earlier of this year. So we are growing very fast. focused on those small ticket size and then this ACS-based, modeling. And then also we are managing the risk very well. Our DPD-30 is less than 10%, which is almost the other digital NBFC companies. So given that we are dealing with a little bit risky group, we are managing our default. DPD-30 is also very good. So that's how we are actually approaching this target market and users, and then how we manage our risk.
Charlie, one question that I have, right, and this is something that I highlighted in the past as well, right, is that India operates at many levels, right? Like we discussed, tier 1, tier 2, tier 3, right? India operates at many levels. Now, what happens in a case like that when you are creating credit rating system or a credit, say, understanding or profiling system, which is built on preferences and influences, right? And say lesser, or for example, on financial transactions and, and that type data, it becomes complicated, right? How have you been able to achieve the product market fit? Because, you understand where I come from, right? It's a very different ecosystem. It's a complicated ecosystem in that sense, right? So how have you gotten to that product market fit in that sense?
We have our own ACS, alternative credit scoring model, and then we give scoring to our users. But it differs by area, by job, by age, and by many things, especially for the corona situation, how the corona situation is serious or not. So depending on those various multiple factors, we give different credit score to different users. For example, last year, Andhra Pradesh and then Telangana, when the Chinese app issue happens, and then actually we give a different score to those users, to those areas. Salary or non-salary or job profile like a student or wife, and then some kind of some other factors like repeated users and new users. So we have a various, scoring by various, group of users. Almost every week, we updated our rule. We call it the rule update. Okay. Based on the ACS, the credit scoring, we apply the different rules for different areas, the group users. That's how we are managing it.
Charlie, when you're looking at India, right, and especially the segment that you're talking of, right, one big problem in that segment is that of recovery, right? And that is largely because, these are people who are new to credit, for example, right? And also the fact that traditional institutions haven't lent to them, right, because of the inconsistency in incomes, right? And that makes it very difficult. I think the overall understanding of the persona becomes very difficult, right? How are you tackling the recovery bit? I mean, given that this is the target segment that you're going after, how are you ensuring that there is adequate recovery which is happening, right? That's something which a lot of businesses have struggled with, right?
Yeah. Yes, exactly.
What is the mechanics there?
Actually, by the end of the day, basically this lending business is everything about risk management. Everything is about recovery. Depending on your recovery strategy and the recovery performance, our business will be plus or minus. So that's one of the most important critical ones. So what actually we are approaching is very interesting. We are approaching this because our ticket size is small. So we cannot utilize offline collection efforts. We cannot count on. So what we try to build up is that application based technology based approach. So for example, our one of the loans, so-called Lebanon loan. That Lebanon loan is as you can see from the name, our users need to repay on time to level up their credit.
Okay.
So we designed our service in very many aspects in our app that we try to give the benefit in the application itself. Okay. The benefit once they repay well on time. Then actually we improve their ticket size, and then we give some credit score to them so that they have a very big incentive, motivation to repay well. So that's kind of the major ones we are designing. We believe that the 70% of the collection is already decided when we decide. So the modeling is basically the first thing we need to focus as far as the collection is concerned. Only 30% is gonna actually play the role for the collection efforts. So for the underwriting model, actually we focused on the ACS build-up, upgrade. And then the collection, actually we design our app technology and application UX based actually approach
Right.
to collect. That's why actually we are managing our risk DPD
Right.
very well.
Charlie, how was the last year, right? So, I mean, I know it's not been a very good year in terms of growth for many, many companies in the fintech space, right? And I think, like you highlighted, there was a moratorium. I think nobody knew really how to sort of deal with a situation like this, right? This was not a normal situation, right? This was an aberration, right? So, how's been the last year? And what are the next couple of years like, right? How are you gearing and preparing for India, which is going to emerge out of the environment that we've been in last 1.5 years?
When we started last year, it was very good. Our plan was to achieve the profit last year, but after March, April, the Corona and then moratorium.
Right.
The moratorium is the thing actually, and our business actually decreased almost 10%, 90% business gone. So almost 8 months, our business was very low and bad.
Right.
But luckily, we got a funding last year from the good investors who can see the potential of our target users and then target product. So this year actually we have grown again, and then we are achieving BP break-even point this year, and then the next year actually we are growing more than 3 times than this year, and then the yearly basis we are gonna turn the profit next year, and then once we grow as we plan, then we are going public within 2-3 years timeline.
Wonderful.
So because we are providing financial services as well on top of the lending, we can have a bit edge and then competitive point for the financial platform, and then even the neobank kind of a concept. So I strongly believe that within 2-3 years of time, our target users will grow, and then this is very big market. We see that, then we will prove that one, so that actually we can grow very fast.
And where do you see yourself in terms of your AUM's asset liability book, right, in the next 2.5 years? Where should that be? What's the aspiration of the leadership?
Like within 2-3 years of time, I think we can grow at least 7-8 times bigger than now. And then our current plan is to go public within 2-3 years of time. So I strongly believe that we want to be the kind of the first player in India to include this next billion users, and then we want to be one of the first players to provide services to this in tier 2, tier 3 India to industry next billion users. So I really want to contribute the economic life actual transformation of those next billion people. Many of my actual people told me that let's contribute 0.5% GDP growth every year from our own service.